Investors are bullish on reducing carbon emissions, proving you can help the climate and grow your portfolio. Princeville Capital's Melanie Nakagawa joins me at Schilling Canning Company. I'm Monica Trauze. This is Off the Menu. How far do you think we are from impact investing becoming just investing?
We are still seeing some friction in actually getting traditional investment houses to dedicate their funds into the impact space.
So you're talking like the Goldman Sachs of the world, or?
I mean, and some of those larger, Apollo is coming out with an impact fund, KKR, Bain of impact funds. But in terms of, all asset owners making impact, one thing that we keep on seeing is there's an impression by some that impact investing somehow or another means it's concessionary returns, there's concessional returns. And that's just not the case anymore. I'm happy to say there's now more and more funds like ours that are for returns, market rate returns first, and impact, and that we're basically showing the world that you don't have to choose. It's not my quote, but somebody had said it's people, planet, profit. And I love just sort of the alliteration of it. But, and if I could have stolen that as our firm's tagline, I would have, but it's already out there. But but those who are doing that, there's an opportunity here to invest for people, the planet, and make profit from it, and you can do all three.
What are the policy trends or signals that get you excited?
The 100% clean energy targets that states are passing, California, New Jersey. Then you've got energy storage mandates. That's a great success story where setting these energy storage mandates are driving more investment and innovation in energy storage opportunities, smart grid technologies as well. Another exciting area, net zero targets by 2050 is akin to the Paris Agreement, where it's setting this global trajectory we all need to get to. And those policy signals are truly driving young entrepreneurs coming out of schools, business schools, and engineering schools to try to deliver into this economy. But it's also driving investment into those solutions because they see a real policy signal pulling those solutions into the marketplace.
So we see high net worth individuals like Bill Gates moving their money to more climate positive technology. For example, Bill Gates has a company focused on nuclear, TerraPower. How do signals from people like him impact the work that you are doing and the willingness of people to invest more on these things?
Well, Bill Gates is one of the sort of masterminds and super brains when it comes to technology, right? And so to have him put his claim behind a large fund called the Breakthrough Energy Venture Fund, where it's really focused on technology breakthroughs, and they're a much longer term fund. I think they're a 20-year horizon fund. So seeing Bill Gates and Breakthrough put their money and their investment behind some of these longer strategic plays are really important signals that investments into growth stage companies, rapidly growing companies like what we do, has both investors in that space, but then also the longer term investments are also in the environment. Bill Gates' investments and other ultra high net worth individuals like that, they're part of what I consider the capital stack. They're actually investors that are contributing to both early stage investments, later stage, and growth stage investments. And we need all of those players participating in delivering climate positive solutions.
The ESG criteria was, for the most part, created a while ago and hasn't necessarily been updated along with new technologies that have come on board. And certain things are excluded from it, right? Nuclear being one of those. How does that criteria need to be revamped?
And one of the ones that we factored into our scorecard and our metrics was climate risk and resilience. That's one we really want to double down on it and really think through how do the investments sustain environmental changes going forward. And more, there's actually new studies out there talking about how they're going to update ESG metrics, and there's a lot of more kind of conversation around how to update them going forward, which I think is important to do because ESG can't just. I think at this point, it's a bit the floor and not the ceiling. And I think we need to make sure we don't see it as ESG just being the ceiling of opportunity, but there's people can go above and beyond just standard ESG, and we hope to see that happen when it comes to climate investing.
Yeah. Eventually, will investing in higher carbon assets become a risk?
I wouldn't say eventually. I'd say it already is a risk.
Okay.
I think you're seeing governments and banks and others the whole movement on disclosure by banks is part of that, to say we want to know what you're holding when it comes to carbon exposed industries, because we see that as a risk, and shareholders are going to want to take action to get you out of those risky investments. I love how everything is locally sourced, which is great.
And they have a little garden outside where the chef has planted lots of different herbs.
So it's its own farm to table, but in the middle of
Yeah, they're literally
DC.
going out there and picking herbs for
putting
the
in
drinks and for the food.
Nothing like fresh herbs.
Yeah.